Hey, insurance agency owners. So today I wanted to share some tips or what you should know when your agency is working with, working with return premium, or especially when that return premium is financed, because we all know how fun financing is. I'm gonna go ahead and just share my screen. Now, what I'm gonna share with you, there's a lot of words on the screen, and I just want to preface that to say, like, if you need to screenshot anything I'm saying, go ahead and do that. I did this because I know financing and return premium can be very, confusing sometimes. So I thought I would just put some words on paper, and hopefully it'll be helpful for you. Let me know in the comments if it is, if your agency works with finance transactions, and I'm sure your agency does work with return premium. All right, so here we are. So the first thing you want to do when managing return premium is you want to make sure that the return premium has been billed on the insurance transactions and the billings match the invoice. Sometimes you'll get a statement. So just make sure that all those billings match. Next thing you want to do is never, ever return premium to an insured without first getting the funds from the insurance carrier or broker. And then you want to also verify if it's financed. So of course, there's always exceptions to the rules. When you have management approval, always get that and attach it in Epic. But again, I don't advise to return anything until you get it. You physically have it. So one of the things, like I mentioned, is you want to verify if the policy is financed. So if the policy is not financed, then you would just follow your agency procedure. And that could be either to apply it to any outstanding balance, or you could enter a disbursement to return to the insured. So what if it is financed? This is where it gets fun. Okay, so you would log into the finance company to see if there is a balance due. So sometimes the balance due is actually less than the amount returned. So when that's the case, usually your finance company will have some type of payoff calculator on the site. Usually it's on the summary page with the one that I work with. So you would click on that payoff calculator, and then you would enter the date that you're planning to make the payment. So I want you to keep in mind too, when you're looking for that date, let's say you're not doing this until late afternoon, then you're gonna need to probably enter the next date. And the reason why is because usually your finance company, they might have a cutoff of when the items can be receipted for that particular day. So for example, if it's 1 CST, then just be mindful of the date and the time so you get the accurate payoff amount. Okay. Once you figure all of that out, then after you get that payment amount figured out, then you can enter the payment online to the finance company, because that would probably be your easiest way to make the payment. Then you would go into Applied Epic to the insurance transactions. You would finance the payoff amount, and then you would enter a disbursement to the finance company and make sure to uncheck the print box if you paid online. Then any leftover amount can either be applied against any outstanding balances or returned to the insured, again, based on your agency procedures. So one of the big lessons that I learned is I've been in the insurance industry now for over 10 years. And so when I was working, as an employee at one point with an insurance agency, I had emailed a carrier regarding a finance policy to see if they were returning the net premium to the insurance agency or to the finance company. Because I don't know if you're aware, but sometimes the carriers will return it direct to the finance company. So I wanted to know what they were going to do. I received a confirmed email stating the funds would be returned to the insurance agency. Well, guess what? That did not happen as the email stated. And instead, the insurance carrier returned the funds to the finance company. This caused a huge mess with the transactions. So lesson learned, just wait to see if you can. Wait to see where the net return premium actually gets returned, whether it's your agency or the finance company. And then definitely don't make any disbursements to the insured until everything has been resolved. Okay, so If you have a large agency, it might be best to finance all return premium credits within Epic, so it avoids anyone applying credits to debits or returning any money by mistake to the insured. So I'm sure you have procedures in place to catch any of this, but it's best to have some guardrails up. So basically what I'm seeing here is if you bill something, it is financed, it's credits, you're not sure if it's going to go back to the finance company yet, it might be best to just go ahead and get those financed. Because let's say that customer calls in and they're asking about their credits, whoever answers that phone, if they're not certain what's going on with this insured, they might actually end up returning or telling the customer, oh yeah, we have this credit available for you and it'll go out soon. When in actuality, maybe it can't be returned because it has to actually go to the finance company. I mean, in essence, it's paying that insured's loan, right? It always has to go to the finance company first. Okay, so in the end, if no money is due to the finance company, then what you would be able to do is you would be able to enter a zero receipt to return the credit to the insured's account. So of course that would be a tutorial for another time, but basically if your large agency decides to go ahead and just finance all those credits, just to avoid any kind of like I just gave you the example of telling an insured they're going to get some money back. If you go ahead and just finance those, but then it turns out you need to put the money back on the insured's account, you can easily do that with a zero receipt. Now, in some instances, it may be where the carrier actually ends up returning the money to the finance company. And so if that occurs, you would enter a zero receipt to return that credit back to the insured's account and then follow it up with it's called a CFIN transaction to resolve. That would be a tutorial for another time. So if you'd like to learn more about zero receipts or CFIN transactions, let me know. But basically, this CFIN is saying that the carrier returned the money direct to the finance company, and that's how you have to clear it off the insured's account. All right, so thank you for sharing your time with me. I hope this was helpful. I know that financing can be very scary, right? A return premium is kind of confusing sometimes too, but you throw in financing and sometimes you might just want to just pull your hair out, right? So anyhow, my name is Honey Bueno. I'm the CEO of Tracking Transactions, where we help insurance agencies with their bookkeeping and their profits using systems called Applied Epic and Profit First. So let me know if you have any questions or comments, whether it's about return premium or financing or another question about any type of bookkeeping related item within Applied Epic. I'd be happy to answer. Just let me know in the comments. Thank you so much. And I look forward to seeing you next Wednesday at noon CST. Take care.